Hello and welcome to another episode of Stock Market Today by Investors Business Daily. It is December 19th. It's a Tuesday, and we've got Ed Carson here joining me, Justin Nielsen, to kind of wrap up the day's information on the stock market. Ed, we had a nice close here, a little pop at the end of the day, getting the Nasdaq Composite above 15,000. What stocks do you have on the agenda?
Yeah, there's a lot of stocks that are extended that are still working, but I want to take a look at a few stocks that aren't extended: Weatherford, Saia, and Super Microcomputer.
A little broadening out, an oil stock, a transport stock, and back into the AI and the tech. So very interesting. Well, first let's go ahead and take a look at the markets. The S&P 500 closed with a 0.6% gain. The Nasdaq Composite a little bit higher, almost a 0.7% gain. Nasdaq 100 was right there at a 0.5% gain, and the Dow Jones Industrial Average up about 0.7, right up there with the Nasdaq Composite. And of course, it was the Russell 2000 that led the day, nearly a 2% gain, 1.94% for the Russell 2000, which is the small cap index. So, starting with the Nasdaq Composite, we've got the 15,000 level, which it's been a while since we've been up here, and it was not too long ago where 14,000 was kind of our obstacle. So, anything to make of this big round number?
I don't know. I mean, but it's amazing how quickly it seems like every time they're, oh boy, there's another resistance level. It's just like it's just paper mache. It just doesn't last, or it just at most it's cardboard. Like we have this little pause here at the 52-week highs, and it just went right through. I think the only concern, I mean, because everything looks really good, is that a lot of leaders are extended now. The 50-day line is 8.5. The Nasdaq is now 8.5% above the 50-day line, and it's still early-ish in a rally, but it's not early. I mean, it's been several weeks in there, so I think we start caring about how far the Nasdaq is above the 50-day line, I think, by this point, and that's suggesting a little stretch. Just to keep that in mind. So don't chase extended stocks. Maybe just be a little cautious with new buys. But everything's looking pretty good, going forward.
Yeah, and it's almost like we have to kind of keep two things in our mind at the same time because while, as you said, this still seems early for a bull market. This was kind of a big move off the bottom, which usually a market's going to digest those gains quite a bit.
Mhm.
You can't go up that quickly without having a little bit of a pause, and we got that. As soon as we got above 14,000, a little pause around Thanksgiving, but it just really started powering higher once again. So if you didn't take advantage of that little small window of opportunity to pick up some stocks, it was kind of like the extended factor came right back in there. So taking a look at the S&P 500, again, I mean, really strong action here. And anything to note that's different here about the S&P 500?
Looks pretty similar. I mean, I would say it's also, while it's 7% above the 50-day line, and usually it's a little lower standard that you do when you say it's extended. The other thing, this is getting very close to the all-time highs. The Nasdaq still has some work to do, but honestly, we're less than 2 percentage points, like 1.5%, 1.6, and we're at uh, all-time highs for the S&P. The Dow's already there, but showing a lot of strength in this market. The Dow has just sort of plowed right through. You wouldn't have thought a few weeks ago that the Dow was going to lead the indexes to new high ground, but here we are, and that one's continued to do well as well.
Yeah. And I mean, we're really kind of looking at the for the Nasdaq Composite and for the S&P 500, we're really kind of looking at the January 2022 time period. That's kind of where we're in right now. We're starting to take out the highs from that time period. Nasdaq has a little bit more to go until it gets to its November November highs from 2021, which is kind of where it made its highs. The S&P 500 was a little bit different there. But let's talk a little bit about, since we're talking about the S&P 500, can we just mention RSP real quick? Because the equal weighted S&P 500, I mean, that had that beat both the Nasdaq Composite and the S&P 500. The market cap weighted versions, it was up 0.8% today. Anything that we should be gathering from this? I mean, it was certainly a day where advancers over decliners strongly favored the advancers. I'm just going to throw out some numbers here. NYSE looks like about 2,400 advancers to around 600 decliners. A little bit narrower on the Nasdaq, about 3,200 advancers to 1,100 decliners. But what is the RSP equal weighted S&P 500 telling us?
Well, it's telling us it's just more than the Magnificent Seven or just that first 50 tech stocks that it's going. There's a lot of strength. I mean, by almost any measure of breadth. And again, that breadth looked terrible in late October. This was at 2023 lows just a couple months ago. Now it's at 52-week highs, and you look at a lot of other gauges, and they're going to tell you the same thing. That's impressive. It's definitely want to be looking out there for other gains. It's just a sign of strength that we really haven't seen for the past couple of years, if not further, because even the 2021 rally felt fairly narrow in many cases. This is really a very healthy sign for the market rally.
Mm-hmm. And speaking of healthy for the overall economy, with small caps participating in a bigger way, if we go to the Russell 2000, this was notable in that it was hitting this 2000 level that it got turned away from not too long ago. And today it felt like it took that 2000 with some gusto.
Yeah, it really did. And there's a lot of power in the small caps in recent weeks, and just really impressive. Getting above the 2000 decisively. It's almost above these levels here. It's getting all the way back. So it's at a 52-week high. It still has more work to do than a lot of the other indexes, but boy, small caps really coming on in a way that just haven't seen in just such a long time. It hasn't really, even just for a short period, it's been a long time when the Russell is outperformed by this kind of measure.
Hmm. And of course, when we talk about the Russell 2000, small caps do tend to be a little bit more interest rate sensitive. They do have higher levels of debt, and they're also sensitive to the economy. So it might be worth taking a look at 0 TNX, which is the 10-year Treasury yield. This is going to, of course, move opposite as bonds. So, I mean, we really had kind of a big shift here, from it seemed like once we hit the 5% level for the 10-year yield, that was where it really kind of gave up. And now we're below 4%, amazingly, and in just a very short period of time. Uh, is this too much? Is this kind of freaking people out that it's come down so much?
I think there was a concern in this area, and there was other factors. When the yield was coming down, and the market was pausing. It's like, well, are they starting to get worried about recession? But the economic data has been pretty decent. I mean, it's not super strong, but it's also not super weak. Now that could change, but with the treasury yields coming down, you would expect some of that to actually be supportive that the market rates are coming down. The Fed may not be cutting rates, but the market is. I mean, the market has cut rates quite a bit, and also the short-term rates have come down even more. It's still inverted, but not nearly like it was. So yeah, small caps are more indebted. So there's a lot of financials in the small cap index, and so seeing less inversion, seeing those long dated bonds that were crushing the some of those regional banks back in March and April, those losses won't look quite as bad as they were getting back in October. So positive signs all around for small caps with that 10-year yield coming down.
Mhm. And speaking of the economy, one of the things that a lot of people will use as kind of a gauge is what's happening with oil. It's worth taking a look maybe at XLE real quick because this is the energy ETF, and of course it's dominated by ExxonMobil and Chevron, right below the 50-day moving average line. But that kind of ties into your first stock, Weatherford, which is in the oil and gas industry. This is ticker symbol WFRD, and it's in the machinery equipment. So there's a lot been that's made kind of the happenings in the Red Sea right now, especially as it relates to the transportation of oil and gas. How does the machinery equipment kind of play into this, or does it?
Well, I don't know if it plays it directly. It's just that if you think the prices are going to go up, like that just makes, say, shale operators or producers around the world thinking, well, maybe incrementally at the
Mhm.
margin, I'm more willing to do more, more activity, and I'll need more machinery, and I'm willing to pay at the margin slightly higher rates because the price of oil is rebounding. So this was nice. What Weatherford showed some nice technical action here. Now, obviously, the relative strength line came down. I mean, it came down because this was coming down when the market was soaring overall, but it didn't come down nearly as much as other oil stocks, even including in this group. And it made this really nice undercut. It got just below this low here, so shaking people out a little bit. And now it's come back up. The volume came in late. It was below average for most of the day, so that was one negative. But it's above the 50-day line. I think you could use this as a early entry into what's probably an emerging base here. On a weekly basis, probably going to get a base pretty soon. Yeah, it already does have a base. It may not have shown up before because it was too low in the base, but
Mhm.
so now it's having that action. I think you could probably have drawn a trend line as well. So I think there was a lot of positive. If you're looking for something in the oil area, this is one of the better performers. So you can see that it broke a trend line as well here. So a lot to like about this name,
Mhm.
especially within the energy space.
Yeah. And as we, compared this versus XLE, the fact that this is back above its 50-day moving average line again in a strong way, as opposed to XLE, which is still below it. That's a little bit of extra relative strength versus that sector spider fund. But as you mentioned, the relative strength on this is a little bit lower, but I think that's kind of excusable if it's been out of favor and maybe comes back into favor. So the question is, I mean, oil and gas can be a little volatile. So do you play this as kind of a position trade, or is this more of a short-term trade?
Well, I think, energy stocks are tough because
Yeah.
they place so much of energy, and especially going to be outliers like this Red Sea, at least with copper. I mean, yeah, you can have a copper strike or something, but, it's like this commodity, and then all of a sudden you can have these, outside events that you're not expecting that have things go up sharply or down. I think you can try to start this where you might want to think about this as a swing trade or take partial profits pretty quickly. If it really works, you can keep on going. Obviously, this has gone on some big runs. Look at that
Yeah.
move, from here to here. That wasn't something you necessarily wanted to get out of right away. I don't know if crude oil could make that kind of run, like go up, the same percentage that it was doing here. But these can go on some pretty good moves. This has been a real leader in that space. So maybe you think about taking partial profits if it works, and then carry the rest as long as it's acting well.
Yeah. And to your point of Weatherford being able to make moves, it might be worth just switching to the weekly real quick, because if you look to see where this came from in the 2022 bottom, I mean, this was this was been a phenomenal move, like from
Yeah.
lows around 17 to $100 stock almost at this point. So certainly a stock that's been able to make moves. And of course, it's something that you do have to handle a little bit differently from your regular growth stocks. Of course, you're going to see a lot of negative years in terms of earnings and growth, but it certainly seems like that's turned around, and you can see that the estimates for this year are up there at 501% in terms of the growth from a pretty measly EPS last year. So
Yeah,
big.
you can imagine this amazing stock growth, and look, the PE ratio is 19 because that's the kind of earnings it's delivered. Yeah, it's not going to have that next year because the comparison. Wow, I mean that's sort of amazing that it goes on that situation now.
Yeah. So switching over to transport, we mentioned a little bit the stuff that was going on in the Red Sea and transporting oil and gas for that kind of a thing. But in the truck space, we've got SAIA, and that is the ticker symbol as well. So this is the less than truckload, and it looks like it's kind of forming a nice little base here. What's your take on it?
Yeah, and it does have some volatile action here. There was some negative trucking volumes that came out like around this time, so a lot of trucking stocks sold off. So it can be volatile, but this is based off pretty well here. There's been concerns with driver labor shortages, labor costs, and weaker rates, and I think that there's hopes that that is going to start turning around. It was trying to peak above sort of this 428 area, which you could sort of see as an ugly handle or as just a resistance point, or you could look at this trend line. It all sort of matches up as something you can do there. This is a good way to measure. This is another thing, a sign of the health of the economy. If the transports are doing well, if stocks like this are doing well, there's potential for It's a positive sign about the economy. So have to look on that. Earnings haven't been great. Supposed to be better next year. So again, there's people are looking at this as somewhat of a turnaround, even though the stock, isn't basing, isn't bottoming out. It's at these longer term highs. But
Um, yeah, so it looks like if you switch over to the Dow Jones Transports 0DJT, if we looked real quick at that, you can see that the transports overall, as you mentioned, have been doing well. A nice move off the bottom from October, and that 16,000 level seems to be an important one. If you look at the weekly chart here, just a little bit above 16,000 seems like an area that's kind of been an area of resistance. 16,700 is where it got hit a few times. So yeah, it'll be interesting to see how this plays out. Of course, a lot of people have been looking at FedEx and UPS and others in terms of the strength of the economy. But let's go ahead and
Well,
end
actually,
kind of.
I
Oh,
actually want to bring up FedEx if you don't
oh,
mind, because FedEx just reported
absolutely.
they warned on 2024. So this stock, which had been in a buy zone, and though I think actually, well, not really buy zone. I think this was the buy point 262, but this one's coming right back down right now. We'll see how that plays out. It's early in the after hours session, but it's something to note for FedEx and also the transports.
Yeah, I am glad you brought that up because I know a lot of eyes were on that for kind of how things are playing out in that space. But yeah, let's go ahead and end with a little bit more of that tech-based AI and everything that goes along with it. Super microcomputer, one of the top stocks, just a phenomenal run that this had, and it really hasn't been participating in this latest move. A lot of volatile action, a lot of back and forth. It's been kind of teasing its way up and down around its 50-day moving average line. Is it time now for this to take a leadership position again? Has the break been long enough?
Yeah, maybe. I mean, maybe it's trying to come back up, and it has rallied somewhat from the rally. It just hasn't made a huge move. It's like it keeps on hitting resistance at places. Like people, oh, it's coming back. I mean, the consolidation doesn't look that great. It really started off in a terrible way, in this way. So it's had some big swings up and down. It did just have a big 5-day run. I think this is sort of, this is positive in this way. There was sort of probably entries here and here. I'd also say that the weekly chart looks better than the daily. It becomes more obvious that there seems to be some clear resistance area, that it's sort of right in the middle of that resistance area. Maybe it pauses here, forges a handle, makes the right side of the base look pretty. I mean, I think it was like Michael Jordan. It doesn't matter how you start, it's how you finish. And the end of the base is a lot more important than the beginning. I mean, you'd like a perfect base throughout, kind of situation, but it's easier to just say, okay, it started off poorly, looking better here. So I thought it was pretty positive action here today, an inside day to yesterday's big move, which capped a 5-day run. It came off of lows. So maybe it pauses here for a little while, forges a handle, and then, moves out. We'll see though. It hasn't, that's a nice story. That's a nice scenario, but it doesn't mean that's going to happen.
Right. And that kind of goes back to our original thesis that having multiple scenarios in your mind at the same time is worth an exercise worth doing. You have to kind of think, okay, this is one of the scenarios that could play out, and if this happens, how am I going to handle it? And look, there's another scenario here where it just kind of comes up and gets hit again. I mean, it's certainly
Hmm.
that gap up, that gap down that it had from its last earnings report 2 earnings reports ago was pretty significant, and there's some ground to make up from that. So yeah, the jury's out on it, but it's certainly if you start a position maybe smaller, you add to it as you get that feedback that it's working out. Certainly a way to go. Any last thoughts on the market? Because you did kind of mention that quote about it's not how you start, it's how you finish, and it certainly seems like we're getting a good finish to the year.
Yeah, and I think that's also, just remember, just you don't always have to, you don't have to be fighting. It's hard to remember in the moment, but you don't have to be trying to make tons of money, at every point in the market, because there's been some times when it's like, well, you want to at least scale back or at least not be more aggressive, and sometimes you want to be almost entirely out this year. And this has been a really strong year. 2020, 22, we don't even want to think about anymore. Uh, but uh, but this is a strong finish. This is an opportunity to make money. Hopefully you're in there, and hopefully this can cap off the year. hey, and then next year will be another chance to start fresh. I mean, Scott St. Clair just cashes out at the end of the year just to make everything simple. I'm not necessarily advocating that, but uh, just keep on trying to work on that, and keep on thinking about picking your spots. And this is a strong way to finish the year.
Yeah. Well, that's going to wrap it up for us on this episode. Thank you so much for joining us. And hopefully, you can join us tomorrow morning on IBD Live. You can find us at www.investors.com/IBD Live. That's a show that we do every morning. Ed, of course, is a host as well as a panelist, as am I. You can watch us. We start 10 minutes before the market open. That's 6:20 Pacific time, 9:20 Eastern time. And we go for a full hour and a half plus, depending on how much we have to talk about and how quickly we can get through stuff. But if you miss us there, definitely make sure you check us out tomorrow on Stock Market Today, as well as the podcast. I'm going to have Randy Watts from O'Neill Global Advisors on. He's going to be talking about Fed action, so that's going to be dropping on Thursday. So lots of educational opportunities for you. Hopefully, we can help guide you in making more money in the stock market. That's it for us today. Thanks a lot for watching.